Washington appreciated how much over the last 40 years?
828%.
And that was number what in the nation?
Number one out of, and I think we still have 50 states.
Number one out of 50 states. And that is due to the Growth Management Act and this forced control of where homes can be built. I know you don't have a crystal ball, but looking out into the future, do you think we will have above average appreciation relative to the rest of the nation in Washington state, or below, or at average?
That's a great question, because I've been kind of watching it a little bit for our own purpose and everything else. But it's funny, I was having this conversation with somebody the other day. We were doing a talk. I'm a little more in the brown banana stage of my investment. I'm not in the green banana.
Yeah.
So, but now that you've kind of sat here and watched how it works all the time, real estate isn't a perfect system, because it has a lot of outside pressures.
Yes.
And right now we have more outside pressure, unfortunately, than we had planned on. And whether it be politically motivated, whether it be anything, it doesn't really matter. It's a reality. Our entire market right now is sucked into interest rates and insecurity on the job market. I don't think in the long term we should be worrying about an insecure job market. I mean, the government intentionally has been trying to drive us to 4.5% unemployment rates. Some states it's going to be higher, some counties it's going to be higher, but basically in the central Puget Sound it runs about 4%. And when the government's intentionally trying to do that and slow the economy and drive up interest rates to slow things down and lower inflation, I think we're pretty close to all of our targets. But you can point at interest rates as being the one thing that has ground us to a stop. We have a lot of people not selling anything for the last couple months. We've watched the market, and it seems like things over 2 million, where it's buyers that don't care so much about interest rates, are selling like crazy.
Yeah.
Things under about 800,000, depending on the community you're in, those are selling. But it seems like the stuff in between, new construction,
there's kind of a stuck middle in new construction right now.
And that used to not be the way it worked. It was the move-up buyer that really focused on that 1 to 1-2 house and forced the market up.
That move-up buyer's locked in, so they're not flipping up, and that's not creating that pressure on the middle.
I want to see that conversation you're having with sellers about listing their house. Like, what interest rate you at? 2.8?
Yeah.
I don't know where I go next.
So we're going to go from 2.8 to 7.
Yeah.
Your mortgage payment's going to go up 200%. How does that sound?
I feel like my next line is, let's do hand puppets. Because I don't know where to go on my next conversation other than the fact that more real estate is better. And who says you have to sell this house unless you need the equity to sell? Then we have to have a different conversation. But there's other ways to do it if you want to make real estate your investment tool. And so I'm just saying, in the long run, it's a no lose. I'm not very good at stocks because I don't follow them.
Yes.
I think it's gambling to me, because I would say, well, hey, that guy looked good on TV. That would be something that I would buy, because I think I understand what's coming.
Yep.
But I'm really gambling because I know nothing about their structure, nothing about the people that run it. Real estate's a physical thing. I understand that we're not, again, making any more. And in the state of Washington, we're making less.
Yes.
Because we're stacking up people, but not giving us the opportunity. And the government's saying, hey, that place that you could get 2 lots on, now you can have 6. And so they gave me free money if I chose to sell or move or do anything else. So I think it's just created a great vehicle for people to continue to move forward. So let's take a look at what's happened over the last 3 years. We average about 13 or 14,000 sales a year in Snohomish County.
Yeah.
And let's say 13.5. We've been selling about 8,000 to 8,500 for the last 2 to 3 years, and we're in kind of that track right now.
Yep.
That tells me that we've got about 5 to 6,000 buyers a year that have been stacking up, plus people moving into our market.
Yeah.
We've got, easily pick a number, 20 to 25,000 buyers for Snohomish County that haven't bought. Every time this built-up demand finally releases itself,
yes,
we get this crazy market again. We get in 04, 05, 06.
Yeah.
We get the after or during COVID, which nobody saw coming. No one could have predicted that craziness.
Yeah.
We get another COVID market because all of these people have been on the sidelines. What would it take? Just, I think, emotionally, get me to 5.9.
Yeah, just under 6,
rate.
100%.
I ran it this morning, and you and I know this stat. I run 10-year T-bills.
Yep.
And 30-year mortgages, because they kind of track each other so closely. And what's the 50-year average of the difference between the two?
1.8.
1.8. And I ran it this morning, and we're at about 6.9 on interest rates, and I think we're at 4.6.
Yeah.
So it's about 2.3.
Yeah.
The thing that it's disappointing to me is if you take a look at credit scores, because I hear it's because of the risk. I don't know that I believe that it's because of the
there's
risk.
a greed component on there.
There's a padding of the difference because I'm doing less mortgages. So we could easily, just in a normal marketplace, say, okay, I could drop a half a point right now and be at 6.3. The government kind of takes the pull off of us. I feel like the real estate industry always gets squished every time there's an economic problem because the only thing they can control is interest rates, right?
Yes.
So we've got that going on. We could easily be at 5.9 next month if we would drop the Fed rate a couple times, which they could drop it twice here if they choose to. And then all of a sudden, then lenders get, I was looking at the average credit score at like over 760.
Yeah, the average credit score is up. The average down payment is up. These buyers qualify more than any other buyers in history.
Yeah, loan to values are way better than they were. So there's some leverage points that need to happen in this industry that we could easily take off again. And again, affordability is a factor, but okay, we're going to, if you take a look at what they say about the change in, like we went up, I think about 2% in the first quarter, maybe 1% in the second quarter. Now we'll be flat in the third quarter and maybe go down in the fourth quarter. But if I'm an investor, I'm buying then. Mm-hmm. I'm buying in the fourth quarter. Do I think that we've got a real estate chasm coming? Absolutely not. We just have too many people coming this way. Yeah. We have a pressure point because of interest rates.
Yeah.
And that's what I see right now. And if you take a look nationally last month, it's the first time in a long time that now we have 1.4 million buyers and 1.9 million listings. Yeah. So we've bumped up a number, and here locally, we have that same thing going on. Investors make money when the market's down. And when the market goes down this second half of the year, that's when you should buy something.